welcome to EWF Bootcamp day number 4 live trading room. In this video we are going to show you how you can join a live trading room every day, as well as watching the recording in case you cannot attend it live. And also we also will show you how you can properly understand the trading journal that will be given every time you join the live trading room. Also, we are going to talk a little bit about risk management so that you can trade it the right and safe way. So right here we got 3 live trading rooms. So each group will have its own live trading room, and each group, as we explained in the first day, constitutes about 26 instruments. Now the group 1, the time is between Monday to Friday, okay, so every weekdays, and then group 1 starts at 9:45, 10:30 Eastern time. This is GMT, okay, and then group 2 starts at 10:45 to 11:30 GMT, and then group 3 is going to start from 16 to 17 GMT. Okay, duration is about 45 minutes to an hour. Now, platinum member and diamond member will be able to access the live trading room. Okay, if you are trial, you can also access the live trading room. But remember, trial, after your trial period is over, the 14 days trial, then you will be automatically enrolled to the gold plan. Okay, so gold plan does not have access to the live trading room. So as a trial member, therefore, you can only have access to the live trading room only during the 14 days period. Then after your trial is over, if you do not upgrade to platinum, then you won't have access to the live trading room as a gold member. Okay, and so what live trading room is our analyst scans the market every day to find trading opportunities, okay, from each plan right here, each group. And trading journal is going to be provided, which has the setup parameter like the entry, target, profit, stop, and then also the risk to reward calculation. So let's take a look here at the website and see where we can go to the live trading room. So after you logged in into our website, so what you can do here now is you go to, let's say, group 1, and you click the live trading room, and from here you will be able to join the live trading room. Click here to join. Now today is a weekend as I record this, so therefore there is nothing here, but usually on the weekday you will be able to enter your name, email address, and then from there you will be able to join the live trading room when it starts in this time, at this time. Okay, so at that time you will be able to join the GoToWebinar meeting. It's a live webinar where our analyst is going to show you some trading ideas on that particular day. Now in case you cannot watch it, okay, so what you can do is you can watch the recording by clicking it here and watching the recording on that day. And this video, the second one here, is teaching you how to best using the live trading room. Okay, so you can also watch this again. And then finally the live trading journal is going to be posted here as well. Now the live trading journal is going to be given to you if you can attend it live. It will be given to you during that session as a PDF file, so you don't have to wait for the image to get uploaded, but rather you can immediately get it if you can attend it live. Okay, so this is the trading journal, an example like we saw earlier. So what this is it has, as you see here, there is a color code, different color. Okay, green here represent ongoing trade, meaning we are already in this trade right now, it's already filled. The orange color means this is a brand new trading idea on that day, so this means it's not yet filled, we just present it as a new trading idea. Okay, and then blue means it's already risk-free, meaning once we get filled, our system is using a system in such a way that whenever it moves in our favor around 50% of the third swing, we will start moving the stop to either to our entry level, or to take partial profit and then move our stop to the last low and last high. So basically this means that we are creating risk-free position. If we get stopped out, then we will have no loss anymore. Now the green one is not yet risk-free, meaning it's already failed, but then we're still waiting for the market to move in our favor before we create risk-free position. Okay, and the orange is totally brand new, therefore it's not even yet filled. Now there's another category, white color, that is not shown here. The white color basically is an old setup. Maybe we give it to you yesterday or the day before, and it is not yet filled. So it is not yet filled, meaning it is not ongoing, and it is not risk-free, but it is not new either, right? Because if it's new on that day, it's going to be orange. So which means that if you see a white color, meaning no color, then this means that it is an old pending setup that is not yet filled. Okay, so we do not recommend you taking trades that is already being filled, like green or blue. So let's say you just join as a trial member today, and then you see this journal here. So what we do not recommend is, we do not recommend you trying to go long gold by yourself, not in this entry area. So you should forget the green and blue depending on the time you join, and then focus only on the orange and also on the white if you are new. Okay, otherwise if you join this is already filled, so it's already moving, so we don't recommend you to try to trade this anymore. Now there's also type column here. Type 1 meaning is a shorter term trade, which means it's few days to few weeks. Type 2 is a longer term trade, 1 week to few months. Okay, and then the date here is the date column, means the date in which the trade idea is generated. The group here is where the instrument is trading, whether it's commodities or US dollar or index or yen pairs and so on. Now we do not recommend to take trades in the same group, meaning if we give you gold or silver, usually what this means is you cannot take both trades here because they are in the same trade, so you should only choose one. So we do not recommend traders to trade the same group or correlated instrument, but usually we are going to explain it in the live trading room, which group is similar, which one you should not take, if you trade this, then which one you should not trade also, and so on. We usually will explain it in the live trading room video. The RR here is risk to reward, meaning we always take trades that is 2 to 1 usually, so which means for every risk that we have based on the stop, we always have a target 2 times the risk. Okay, and then the note here, usually we put down some additional information for you to see. Okay, so this is how you read the trading journal here. And then this is some risk management. Trading is never 100% certain, so losses is always part of the game, must be accepted as the cost of business. So the most important thing at the end of the day, at the end of the month, is winning more than losing. Okay, so for that, in order for us to survive in this game, we must control the risk in each trade. So we recommend you to implement the following risk management. Number 1, of course, use only capital that you can afford to lose. So if possible, use demo account until you understand our approach. Number 2, always use stop loss in any trade and never open your stop loss. Never trade without stop loss, because that is just a recipe for disaster. Okay, it's just a disaster waiting to happen and a margin call waiting to happen. So never open your stop loss. Then number 3, now this is the most important, and you need to follow this with discipline here. Only risk at most 2% of your capital in each trade. This is called a constant risk percentage approach, meaning you already know your entry level from the trading journal, you already know the stop loss, so your job really is to calculate a position size, so that if you get stopped out at your stop loss, you lose at most 2%. The less the better, so 1 to 2% risk for each trade. Then you can use position size calculator if you are new to really understand how to open the right size properly with 2% risk maximum. So this is position size calculator. You can find it in our website. Okay, and I'm going to show you next here. And what you need to do is you just input the information here. So basically every time you trade based on the trading journal, you cannot trade always the same size. The position size cannot always be constant because it depends on the instrument that you trade, it depends on the entry, and it depends on the stop loss. The one that has to be always constant is the risk. So the risk always is at 2% maximum. So you use this calculator here if you are still new and not used to it, and then so to make sure that you trade at most 2%. Okay, so let's take a look and give an example here. If you go to our site and look at the latest live trading room, for example, you notice here, for example, this trade New Zealand dollars, this is already filled. Okay, but suppose we assume it is a new trade that is not yet filled. You notice we like to buy long. Okay, we like to buy at 0.726 and stop at 0.717. So that is about 90 pips stop loss, right? This is 90 pips stop loss. So what that means is you need to know what is your capital size and what is your risk, and then you open the proper position size. So let's go. And now remember, 90 pips stop loss is what we are looking for here in the New Zealand dollar trade, right? So you go to our website. In the educational here, there is a link position size calculator here. So you need to input all this. Let's say you're trading with 100,000 US dollar, let's say. Okay, and then you put down your maximum risk is 2%, and then you are trading, let's say, New Zealand dollars, right? You're trading New Zealand dollar, US dollar, and your stop loss, like we saw earlier in the trading journal, is 90 pips. So when you click calculate here, it will tell you how much size that you can open with 100,000 capital with a 90 pip stop loss, trading New Zealand dollar US dollar with 2% risk. And it tells you that you can at most open a 22 mini lots, or approximately $222,000 dollar position size. So effectively you are only using around 2 times leverage, because your account balance is 100,000 and you are opening 222,000. So it's about a little bit higher than 2 times leverage of your initial balance. So if your balance is 10,000, then it tells you that you can open at most 22,222. Okay, so this means if you are wrong and you get hit on your stop loss, you will lose $200, because $200 represents 2% of your balance, right? So that's how you calculate the position size. Every time you want to trade, okay, with the trading journal or even yourself, you must always make sure that you put stop loss, number one. Number two, you calculate the right size when you open the trade, so that when your stop loss got hit, you lose at most 2%. So the lower the better. So 1% is better, but at most 2%. So I hope that this video is helping you to understand, okay, a little bit about live trading room, and also how to use it, how to use the trading journal, and also how to manage your risk. And I'll see you all again in the next video.